Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Monday, July 26, 2021. What we're going to do in this video is a quick update on the major stock indexes and mention again we have all the market leading FAANG stocks reporting this week, so expect some volatility going forward. Then I'll hit on update some of the recently highlighted trade ideas. That includes lumber, and I'll try to stick to it in this order: lumber, gold, and the dollar, US dollar, the gold mining stocks, GDX, crude oil. I want to just do an update on Bitcoin and Ethereum. There was some movement there today, and we'll talk on those quickly. DM, that's the trade idea shared this morning. And then we'll probably, if there's time permitting, just a quick update on wheat and corn, even though we're out of those trades. All right, starting out here, this is the NASDAQ 100 QQQ tracking ETF, the 60-minute chart here. This is our primary uptrend line, very good trend line. Gave me a sell signal when it broke down here last week. Had an initial jog down, and really no different than where we left it off Friday. We were back testing then, and we continue to back test today. I have a minor trend line here. This shows a little better on the futures. I'll get to that in a second. We do have a high level bearish PPO crossover right there on the PPO, and also in extreme overbought conditions right there. This purple line is well above. It's about 80 or so versus the normal 70 level. That's really what tends to do the trick. Often that's about as high as you get in QQQ. So we'll watch that. Let me show you futures, and that would be NQ. This is the 60-minute chart, so it looks the same. Here's our primary trend line right there, and there's a nice clean, you can see it, near-term uptrend line right there. So you're wedged between the uptrend line, which forms this little wedge-type pattern, in the primary uptrend line there. So again, it's a back test of the primary trend line. Divergence still intact here on the 60-minute time frame, negative divergence right there. And so the FAANGs are reporting this week, and by at least the indications of this chart, you can never fully predict or know what's going to happen after a company reports earnings. But again, we have all the market leaders. And let me just talk on those real quick, go through those. We have, let me grab my list here. Actually, I can do it this way. I'll flip over to a daily chart, and again, you can see bigger picture on QQQ. This is the daily. Here's our primary trend line on the daily. So this is the more significant trend line. This comes off the March lows of last year after the pandemic first hit, and that trend line's also been broken and back tested. So this trend line here, which on the daily is a subordinate or a minor trend line, is that primary trend line on the 60-minute chart I just showed you that starts here in May. And so when you zoom in on the daily, you see the breakdown and the back test of that. So it's almost a mirror of what's going on this shorter term 60-minute time frame I started with. There's that near term trend line off the May lows right here, and there's a much smaller time trend line there. But what I was going to show you is the FAANGs. This is QQQ, of course. Big divergences still in place and all that good stuff, everything that was talked about before. But as far as the earnings this week, so you have after the close, market close, all of these will be after the market close. Tomorrow, Tuesday, Apple reports. There's a near-term trend line for Apple that would trigger a sell signal and a solid break or close. Little caveat is, the initial reaction after earnings, especially in the after-hour session, also in the pre-market, isn't always the lasting move that sticks. So you'll want to watch this going forward. Whether it happens tomorrow, next week, a break of this trend line would give us a sell signal on Apple. Other than that, until and unless that happens, it's still in an uptrend. Microsoft already did break down below the minor trend line here, or this is a daily chart. Breakdown there, back test. They report Tuesday, also tomorrow after the market close. That was a little sticky. Let me just change these divergence lines right there. So again, it's these divergences that indicate downside to come, whether it's the day of or the day after, or a week or so after, would be, my best guess by the read of these charts. There's Amazon. They report on the July 29th. That's this Thursday after the close. Alphabet, looking at, might have it on the other share class. Yep, Tuesday also, tomorrow. And then Tesla, July 26th, Monday. So that one's going to be here after the, looks like after the bell today. Okay, let's loop over to one more thing here, and that would be the 60-minute chart of ES, the S&P 500 futures right there. There's your symbol. These are hourly candlesticks, and so here's the divergence that we've been pushing up on most recently there on the PPO. This is the divergence there. Here's a minor trend line which was broken recently and back tested, is being back tested right now as I do this. So that's it for the indexes. So again, we'll certainly have a good idea come Wednesday, and then even after after the close Thursday, we'll see how the market finishes up this week with a lot of those big fangs reporting. Okay, next up, let's talk about lumber real quick. I still like that one. These were the previous targets here when we broke this trend line. That first target was hit. We had a second target, might have been this one here, I believe, if I recall correctly, that would have been T2. But I retasked these targets recently when we went on to make another divergent low and then a breakout and a back test. We just hit the first target here recently, had a little pullback as to be expected. So this was new T1, which has been hit, T2, T3 now, and so I still think we'll continue on up to those. So lumber's still looking good for the time being, unless anything changes. PPO's in bullish territory, back testing that zero line right here, and we'll see if that can hold as well. So be looking for the next run at T1 since it's already been hit, about 705 roughly. That will probably go on through there and continue up to this next target, about 855 and a quarter. So unadjusted targets, actual resistance levels, of course. Gold. Let's talk about gold. I'll use gold futures. And that's GC. Really nothing much to update. I'm going to have to roll these futures soon, but this is still the August contract right here. That is support still at the buy zone. We've had multiple opportunities here. No guarantee it holds, but I'm still favoring a thrust up to that next target, T3. Remember, we already hit T1, T2. This was the breakout right here. There was our divergent low, rallied up, T1 hit, T2 hit, pull back, pulling back to this resistance, now support zone, buy zone, and still favoring a move up to T3 and T4, this T4 zone. That's going to the dollar's been hanging in there. The dollar has been resilient. Part of this trade was still hinging on my outlook for the dollar. I think the dollar is poised for a reversal. This is DX US dollar future 60-minute chart. We've broken this trend line. We back tested. We moved lower. Dollar was down today, and I expect it to continue lower, and should it do so and move down to these targets potentially down here, that should be bullish for gold. So no outlook there. Still think gold's an objective buy point at this level. And if you don't trade gold or even futures, you can trade GLD, obviously the ETF for gold, or you can trade GDX. The miners are usually going to move when gold does. This is what it looks like on a daily chart, pretty much back testing this trend line here. 60-minute chart looks pretty constructive right now. We have this nice divergent low here, bullish divergence. This is a bullish falling wedge pattern right here on the 60-minute chart. So if you're not in it yet and you want to be, but you want a little more evidence, a little more reason to buy it, you'd want to see a breakout above this bullish falling wedge pattern. And then I'll give you just near-term targets. First target I could tell you would be right there for sure. And that's definitely a resistance level. And then let's say target this gap right here. And should that happen, that'd be about a 4, almost 5, yeah, about 5%. Yep, to the button. You can see the pop-up box to the left to the first target, and about almost 10% to that second target there. By the way, that's 35.22, 36.82. CL crude oil still in correction mode, at least by the look of this chart. First leg down, there was our sell signal on the trend line break, counter trend rally with a divergent high and a small little wedge. Next leg down, counter trend rally again, still putting in a series of lower highs so far as of now and lower lows. And I added a resistance level here about 72.63 today, and that capped it recently. So ideally for this one, If you're short or you're looking to short, that's an objective short level. You want to see it stay below that level, and of course you want to certainly see it stay below this high. So depending on what you're shooting for, I made the case for a potential much larger drop in crude. This is kind of near-term stuff, and that $66 target was hit recently, and that may be it for now. At least it was put in. When it hit that target, we had some positive divergence. That was the catalyst for this bounce. But I'm still leaning this way, and especially if the markets don't like what the FAANG stocks have to report this week, because if they drop, the market drops, and if the market drops, people sour on economic growth expectations, and then crude oil will most likely fall with it. So that's what you want to watch for there. Okay, Bitcoin moved today on speculation or talks actually that Amazon may start accepting Bitcoin. That was a catalyst for a nice short squeeze. There were a lot of high short interest from what I heard in Bitcoin, up about 21% today. But just what a beautiful chart. I gave you guys a sell signal on Bitcoin way back here, the day after it put in its that all-time high right there, peaked, and fell down, hit the first target zone. Danced on that for a while, broke that, fell down, hit the second price target, and then hit my third and final price target right there, and then hit it again twice recently. When it did, as I mentioned a week or so ago, was starting to put in, and it did put in positive divergence. So we have positive divergence there. Equal lows in price with higher lows in the indicators, and so the move wasn't completely, there was a catalyst there, the divergence, a minor trend line break. However, I want to point out we rallied right up to T2. Remember, T2 was support on the way down, support, and we hit it there. Support once broken becomes resistance, and you can see on that bounce it was resistance after we broke it, resistance again, and could prove to be resistance. If not, with that divergent low, I can tell you right now, would I be shorting it? No, I don't like shorting right after something has a 50, what was the correction? About 50% or better correction, and falls to support and puts in positive divergence. So there could be more upside. I just wanted to give you levels. I am suspecting we may get another leg down. This was and still is a potential target I had down here around 17, and a lot of times, I think there was a little too much giddiness today on that Amazon announcement, and it wouldn't surprise me to see it take one last leg down, whether or not we put in another divergent low or not. So I did want to make mention, at the very least, I can tell you we ran into and closed below that resistance level today, about 33.64. Again, next resistance about 39.25. We'll see where we go tomorrow. And then ETCG, not by coincidence there. Also, the short that one, bearish that one for a while. Also gave you buy signals when that 2244 target was hit at the same time Bitcoin hit my third and final target, and that's where we had that nice trade. ETCG rallied up to that 41.13 resistance level, former support, and made, just like Bitcoin, made this little double bottom recently and rallied today, and it was up about 23%. But these are levels untouched. I've had these lines on the charts. It's way down, or at least on the way up here when it was thrown out as a long trade idea right here. And so they're all resistance levels. And look, not by mere coincidence, we, just like Bitcoin overshot that former T2 level, I think it was, I just showed you, we overshot briefly intraday 34, it's about 34.94, and closed right back on it, or right around on it, just like Bitcoin closed down right below that, on or below that T2 level. So that's it. Stories are both at resistance. If there is any more upside, wouldn't surprise me if it does. 41.13. I'm out of this. I'm standing aside those for now, but I wanted to give you guys those levels. And if it can power up through 41.13, $48 would be my next resistance level there. But I still lean towards, and I think it'll happen when the least expect it, when everyone's getting giddish, 23% pop. I still think Ethereum is going to come down to this primary trend line. That was and still is my final near-term target. So I'm viewing this as a counter-trend bounce, and that's one reason I wouldn't be going. That's just me. Wouldn't be going long. Sure, I wish I was in it today, 23% pop, but that's fine. If I don't see a reason, I don't have high level of comfort to be in a trade. Stand aside, watch it, wait for the next objective entry. But I did want to do the update for those of you trading the cryptos. DM was a new trade idea today. Here's a trade idea. I've thrown this one out in the past. It's popped on these divergent lows, and as I said, the basis of this trade was both that daily chart I just was on, but more so this 30-minute chart here. Watch, rinse, repeat. Look for the divergent lows right here. We had a divergent low, and that was a whatever I posted today, I don't know, 50% or so rally. Another divergent low there, another rally. And you can also see there's trend line breaks if you don't want to, just because it's hard to say buy a divergent low because you can keep dropping. So what you want is that buy signal, like a breakout of a little wedge pattern like you had right there. And there was a breakout and a back test there. Up today, nothing big, but about 4.85% gain today, and getting close to that first target. Threw it out this morning when we were down here. I took the chart in pre-market, and then so you can see moved up today. Targets again are unadjusted targets. Actual resistance levels 966, 997, and 1026, and 1161 is my current final target there. Depending on what happens and how the market does, maybe extend that. But right now, that's my max swing target there. And then on the grains, last week I told you I wasn't. I'd probably stop updates on the most recent wheat and corn trades, the grains. Most recently, they put in these divergent lows, and I retest these. I give you an additional target here, and then that was the final T2 target. Even from back here, it was hit to the button. I mean, you look at that to the almost to the exact cent there. If not, I didn't put my cursor on it, and that's what I said last week. That was it. Final target hit. And then we also went on, I said if you wanted to hold out for additional gains, there was a trend line that you could set a stop under, and if that didn't work, you could also put a stop under 694.76. All those levels were taken out, and you can see nice correction. So this is swing trading, get in, get out, get the hit and runs. And now longer term, again, the case was made multiple times for a longer term investor to buy on that pullback to the trend line. And that was it. So that coincided with that divergent low we were just looking at on the 60-minute chart of wheat futures. And this is a pullback. Now, where does it go? Hard to say, but typically that's when you want to be buying pullbacks to the primary uptrend line. And it was a long-term trader with a stop somewhat below it. So near term, I don't have a strong opinion on it. I just wanted to update that it was. For swing traders, it got out at that final target. It was a good place to sidestep and avoid this give back in profits. All right, and that's it. We're going to keep this one short, just over 17 minutes. I got covered most of what I wanted to hit on today. And again, strap in, expect some volatility this week. Could go up, could go down. But we do have the market-leading FAANG stocks reporting, so wouldn't go too heavy on any index positions until those are out of the way, whether you're bullish or bearish. All right, this has been Randy Finney with Right Side of the Chart. Have a great day.